Hello, everyone. This is Sean here. Welcome to Property Zone Live. Okay, today is the 10th day of Chinese New Year, Toss Up. For those who are celebrating Chinese New Year, I wish everyone had a great celebration and a happy holiday. So today's topic, we will be talking about Fed, which is the central bank of the US. I think the whole market is paying close attention to the next move of the Federal Reserve. Whether how soon, it's pretty much a confirmed news that they will raise interest rate this year, 2022. The only thing is we are not sure about is exactly when. Although we expect to be as soon as March. The second thing is a quantum. Would they do 25 basis point increment, or would they straight away go to 0.5? Or the other one is the interval. How frequent would they raise interest rate? I think these are all the very big decisions, and it's going to be impacting almost every corner of the world. So some have point out and voice out the concern on Malaysia property market. How can we handle? How can we cope with the impending rate increase by Federal Reserve? So I've actually prepared some slide, and I'm just going to share the screen and pull my slide out. Okay. So I hope everyone can see the slide now. Okay, these are some of the slide information and some of the news I've taken down from internet and some on the newspaper as well. So just me go through with you is that Fed, which is the Federal Reserve, the central bank of the US, is expected to increase their interest rate as early as March, okay, which is next month. So some of them they are looking about 25. Some even expect the Fed is going to take a more aggressive move. Okay, now a lot of us, not a lot of us, actually all of us went through the COVID-19 era, and during that time, US and the rest of the world has bring down the interest rate as much as they can, so they know it can stimulate the economy growth by using a low interest rate. Now, what really trigger the fastened decisions of Fed to increase the rate earlier than expected? The main reason we are looking now in US actually to a lot of different countries in the world is actually the inflation. Okay, as you can see the title that are taken down from CNBC, inflation surge would push the Fed into more than 4 rate hikes. So because of high inflation, they'll push the Federal Reserve to increase the interest rate as early as March compared to what they previously predicted in July. Okay. Next, we will talk about inflation. Just share you know how bad the inflation, how severe the inflation is in US now. Is in US inflation hits 39 years high as 7%. Now, when you actually say 7%, some people we are looking at it's still a single digit. But compared to 2-3%, we are talking about 3 times, sometimes even 4 times the normal inflation rate. So that's why it leaves central bank in the world. So in this case, the Federal Reserve with no much choices. So we are expecting 3 to 4 times increase of interest rate this year. Okay. So if you chart the inflation rate, for the past 40 years, from 1981 all the way to 2022 now, okay, you can see inflation rate, which is expected. You can see the sign is 7%, is the highest for the past almost 40 years. This is something our Federal Reserve, our central bank, is really need to look into it. Okay. Now, if you bring the things back to Malaysia, our country, Malaysia is actually at a crossroad, right? We know that US will be increasing the interest rate. Option number one is If Malaysia is not following the US step in raising the interest rate, we may see a consequences that capital outflow. Why is that so? If put in a layman term, is that there are a lot of big fund managers, sovereign funds, so on and so forth. They will put money in different countries, giving the calculated risk. Malaysia is termed as one of the emerging market to perceive as a higher risk. Okay, so if they put the money in Malaysia, but at the same time, US is perceived as a safe haven. US dollar is perceived as safe haven. So any increase in US, you make the money that park in US getting more return. A merely 0.25, 0.5% would have a huge impact in drawing the money out from emerging market back to US if there's a disparity of rate. Okay, that's the first thing. So the second choice is if you're going to follow the step to increase the rate, maybe at the same quantum or maybe at a lesser quantum, the question probably people need to ask: can Malaysian economy handle multiple rate hike this year? Okay, US is expecting to increase their rate March, while Malaysia is expected to increase their rate in July, a few months later. Now, next. Yeah, this is the one I mentioned to you. So Bank Negara need to raise the interest rate, okay, in H2, which is the second half of this year, as early as July. Okay, this is the one, the news that came out just last month, 20th of January. Okay, the other one are very insightful articles I would like to share with you is by CEO of GYIQI. Okay, my boss actually written the articles. It's published in the Sun Daily. The title of it, the Fed rate hikes unlikely to hurt Malaysian property market. So if you are one of the property owner or looking to buy property, okay, if the impending rate hikes from Federal Reserve is actually worries you, maybe what I can do, I will actually summarize some of the key points our CEO have mentioned in the articles and I share it with you. Okay. Now, a few key points to take away is that even though we have gone through COVID-19 era for the past 2 years, our Malaysian economic growth is expecting to be 5.8%, a strong growth, 5.8% this year, and we are looking at 5% in 2023. In other words, we were seeing a significant growth for Malaysian economic market. All right. Second thing is Malaysia has a significant current account surplus compared to the worst crisis we have seen back in 1997. Now, current account surplus in economic terms, the easier way is when we actually export something, we sell something, we will earn some money. We get the money coming in. All right. But when we import something, we buy something, we need to pay money to foreign countries, other people. So if you have a current account surplus, that means that the export that we do, the money we collect from exporting, is more than enough to pay for the goods that we're importing. So which is a good news. All right. So we are not in deficit in that sense. Now, number three, compared to US, Malaysian inflation is under control at the moment, and we still rank 10 best in performance on this measure. This is by economists, you can see. Of course, the most important key to take away, since Malaysian economic growth is expected to be 5.8% this year, we will strongly believe BNN, which is Bank Negara Malaysia, will only raise the interest rate when the market is fully, surely, and comfortably back to their footing and in the recovery phase. So I think Bank Negara will not make a rush decision to increase the interest rate if the Malaysian economy, if the Malaysian market is not ready for it. Okay. Now, if let me just zoom into a micro level. I'm a property owner. You are a property owner, all right? Maybe you're looking to buy some property in the future. So, in general, property buyer concern on interest rate hike is they will dampen the property market spirit, all right? oh, interest rate is increased now, it's not good to buy. Malaysian property market, it's not good to buy a property at the moment. Maybe put money in the fixed deposit and earn a higher return. So some of the concern they have is it will dampen, it will actually make the property market less attractive. Okay. The second concern is that most of us, our house loan is on a daily basis. So any increase in the housing loan, it will either extend the loan tenor or it will increase the monthly installment amount. And by default, increasing the monthly installment amount would be the first thing that happen. Since we have enjoyed a lower loan installment amount because of the interest rate drop for the past 2 years. So any normalization of the rate we are seeing. So I think this two is probably the concern of the property owner or future property buyers on an impending interest rate hike. Okay. However, if you look at the interest rate hike from a macro level, we need to know one thing is what we call a normalization of rate. From a record, our current interest rate is at record low of 1.75%. So any increase, let's say 0.25% to 2% of the interest rate, the overnight policy rate, will be seen as normalization. So the impact will be very much different is if you're hiking the rate from 3% to 3.25 or 3.5. So there is a totally different scenario. So this is more like a normalization of rate, yet instead of increase the rate on a normal level. Any rate hike is also a confident vote from BNN on the market and economy recovery after COVID-19. Okay, so this is pretty much sum up for what I want to share with you today. But I want you to take home again today of what happened back in 2008, the subprime crisis. Okay, so coming back to will interest rate increase really hurt property market and economy? In a way, yes and no. But if you do a comparison between what happened back in 2010, okay, just a quick check. Back in 2008, 2009, subprime crisis, US, Malaysia has dropped their rate drastically. You can see the sharp drop of our OPR to 2%. But after the market recovers, okay, from 2000 all the way to 2013, this is where the increase in what we call normalization of rate. Okay, in fact, even during an interest rate hike in these 3 years, Malaysian property market has seen one of the best appreciation. Property has, in some of the parts in Malaysia, has gone up by 150%, some even by 200%, 250% during this short 4 or 5 years. Okay, so if you're looking at here on the right hand side, this is where we are now as 1.75. So if you take a history from there, is that a rate increase is also an indication market are back to recovery. People are more willing to spend and there are more liquidity flowing in the market. So with this, maybe this is another perspective we can look at rather than just looking at the micro impact from the rate increase. Okay, so I hope this is not a too technical stuff for the Chinese New Year celebration because we're still in Chinese New Year. But with this, I think I'm going to conclude my sharing today. And thank you so much. Okay, 恭喜發財 everybody. All right, see you next round. Okay, let me just stop sharing. Bye bye everyone.